about as an asset class and as a way to not just build wealth, but to protect your wealth and kind of expand your freedom. And we have two amazing, experienced and very, 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 very capable panelists that are going to share a little bit about their stories and their journeys. And hopefully we can learn from them. And then we'll end the time with an actual deal that, you know, if you are interested in getting started, it could be a great way to get involved, learn, and also make some money and expand through real estate. So just a quick reminder for those that weren't able to join our kickoff event, just a little bit about Cascades. Really, honestly, like Cascades, yes, is a group of 6, close friends, business partners, engineers, idealists, builders. But really, it's a vision, it's a concept, and it's more than just the 6 general partners that we'll show shortly and do a quick intro. But it's an idea around how can we, as a community, as a network of really dynamic, dope, idealists. There's so many adjectives I could use, just thinking about all the people that I've been involved with in my journey along the way, and those that really see as a part of really making an impact that's bigger than just our own well-being, but also impacting the communities and helping to solve some of the problems that we really want to. And so, as you can see here, we're really aimed at creating community for not just investors like yourself, but entrepreneurs, founders of new businesses from the Black and Latinx community, to really help move the needle on some of the issues that have really been a part of what we've been dealing with and struggling with, whether that be wealth, access in the healthcare space, or even the digital space. I'll quickly, as I said, my name is Vyran George. You'll be hearing from some of the other GPs during our conversation. We really do want this to be more of a conversation and less of us talking at you. I know I get tired of my own voice, and so I'm sure you guys will be right behind me. You'll hear a lot from Tony Awojoodu as well once we get into the panel discussion and the questions. But you can see here, just like I said, a group of really close, beautiful people that lead with their heart and move in purpose, and really want to bring that energy to building wealth and making change in our community. So we hope to get to know each of you a bit more, and you guys get to know us a bit more as well going forward. So I'm pushing through just at a high level so we can really get to the conversation that's most fruitful. Like I saw from the panel, from the poll at the beginning of the session, it looked like we had a pretty mixed group of some, seasoned real estate investors, developers, wherever you are in the value chain, but a lot of people that are just kind of getting introduced and maybe have like dipped a toe in it, or really been really excited about maybe considering it as an option, and maybe have some questions or maybe need resources in terms of other people to do it with, or capital access to do it with. And so we really want to talk about really here is at the concept at the highest level, but also how, what's the mindset that you can bring into this and the creative ways that you can use it. As many of you probably already have touched real estate in some way, whether it be through the apartment that you rent, the house you own, or the house your parents own. It's obvious that the benefits can really be tangible from a financial standpoint, right? Whether it be the appreciation of your house, or like the fact that you don't have to pay rent when you own a home. Like those things are pretty intuitive. But when you really start to think about making the shift to thinking about real estate as an asset class, or an engine, or an avenue to really expand not just like the actual space that you're in, but like the wealth and the money that goes into it, there's a lot of other benefits there. And I won't read this word for word. I think one of the ones I really want to highlight are around just kind of like the diversification and like kind of the long-term security that can really come from having some of your capital in very tangible things like real estate. As I'm sure many of you are hearing, crypto and things like stocks, like there's a lot more volatility in that, as there is with the real estate market. But at least when you own a property, it's something very tangible. There's many tax benefits that we hope to dive into more in future sessions, just because there's a lot of ways to not just make money in real estate, but to find ways to keep the money that you're earning, which is, as you progress in building wealth, your responsibility to what you pay in taxes continues to grow with it. And so real estate can be a great way to kind of protect against some of those things. And the last one that I really, I guess the last two I really highlight, one is the repeatability and scalability. I think that's what really interested me in real estate initially when I started to consider it a few years back, is that you can really start with the same starting capital and find ways to rinse and repeat, buy a property, refinance, get your capital back and go do it again, instead of having to kind of raise new funds. But obviously there's multiple different ways that you can, structure the model that works for you, and depending on where you are in terms of your capital journey, your time journey, and just really what you're looking for. And the last thing I hear, I'll point out, is that although it is a great engine for increasing the dollar signs, you can really have tangible impact in the community when you think about shaping and reshaping the spaces that are available for us in residential spaces or even commercial. And so it can really, help to think about integrating some of the things that we really want to create in terms of a vision that we have for life, but also find ways to build, a future for ourselves. So I'll touch really quickly before we pivot over to, a Q&A with some of our seasoned developers and investors. But just to kind of touch on, like I said, it seems like a lot of people are just kind of starting their journey. And I know a question that I had a few 3 to 4 years back was, one, how do I get involved? Like, one, do I have enough money, or do I have enough time? Or like, what does it mean to buy a house by myself? What does it mean to rent out and manage a tenant? Like, it just all seems so kind of insurmountable. And so what I really, wanted to do with a group of friends and people that I trusted was really kind of break it down into kind of some of the key components. And from that, you can really see there's a lot of entryways and entry points into thinking of real estate as an asset. And we'll talk a little bit more about those options today, and hopefully present one to you later today. But as you can see here, there's multiple ways, and this isn't even exhaustive because there's other things like being a real estate agent, or being involved in more passive things like REITs and mortgage-backed securities and things like that. But we really want to focus on some of the ways that people really get introduced into the space. And so, like I said, we'll spend a lot of time focusing on the first two, which is we coined being an owner or an investor. An owner being, hey, I've got some capital. I'm really excited about maybe owning a property and using it as an asset, and distinguishing, making an asset, meaning I'm getting some type of income from it, whether that be rental income or flipping it and selling on appreciation. Buying your own, I know it's a common misconception, like buying your own home is a sound economic move, but it doesn't necessarily make your home an asset, because it's something that you're continuing to pay as a liability for yourself. And so whenever you flip that coin and you start to make money from a property, that's when it really becomes a way for you to make money on the money that you're putting in. Also, we'll talk about, being an investor, which is, it's like one deviation from kind of running and owning and doing all the work yourself. You can work with other parties that are building and buying portfolios and working with them from either being a lender for their projects and getting a return on whatever sales they make or whatever income they receive. Or you can be an equity partner, meaning like you own a stake in whatever the real estate portfolio that they're building. And so this is sometimes can be a little bit more passive than being the true owner. I know time is money. Time is it requires a lot of energy to buy a property and close the deal and do renovations and get a tenant and manage the tenant and handle all things on the rental side. So I know a lot of people try and think of a mix of these things to make it fit the time and the money that they have access to. So other ones here, just to call out, property manager, although that's not necessarily an investment engine, we want to highlight it here because, one, if you are, most times when you're an owner starting out, like being a property manager is an aspect of the job that you will have to do, and finding more creative ways to either do it or outsource it or streamline it are really important. But also in today's day and age, like being a property manager, for example, being an Airbnb is a way that people are using other people's real estate to make income for themselves. And so you may hear a lot of people that may sign a lease on Airbnb and then be the manager and rent out the properties for themselves so they can receive the rental income from the tenants and pay the premium to the owners. And so there's a lot of creative ways, especially now with how things are becoming much more digital and much more streamlined and much more like Uber share based. And you can actually bring that mindset to real estate. And so you'll hear today from some people that are a little bit more seasoned on this developer side and that really have a vision for not just one property in a certain space, but really a vision for an entire community and how that can play into, the different ways that you can get involved. And you can see from the bottom, like these are all the different ways that you can make money. This is not even exhaustive. But whether that be the rent from the people that are staying in your homes, the dividends you get from an equity deal, the payback you get from lending money to a developer and the interest you get on that, there's just a lot of ways to make income and a lot of ways to protect your income. So I'll pause there and let Tony introduce himself.
Thank you, sir. Hey, everyone. Tony Awojoodu, also a general partner with Cascades, and I am super thrilled to be here, which is why I am super active in the chat and distracted by all the energy that you guys are bringing me tonight. For anyone that knows me, you'll know how much I just love just being with my people and talking about things that are incredibly important, securing the bag through real estate investing being one of those things. So I threw a question in the chat and got a lot of responses, people that already or have already invested in real estate. This was a really big barrier for me. Before I cut that first check into a property, I was frankly scared, right? I had no idea what was going to happen to that property. It was a completely different ballgame where I didn't just own a stock. I owned a physical thing that I needed to manage and transact on and improved. So I guess the question for the group here is, what are some of your maybe barriers or things that you believe to be true about real estate that have been in the way? If there's more that you've wanted to do in the past in real estate investing, feel free to throw it in the chat. Just looking for a few answers here. But what are some of the barriers for you as you've thought about getting into real estate and things that have maybe prevented you from doing as much as you'd like to? All right, so Michael, thank you, sir. So startup capital. Cecil also says upfront costs. Phil lives in a rural area and development is low. How to get in from afar. Audie sent me a DM, not enough money. So a lot on capital. Kelly says time. Lacey says finding the right market. Says, how do I do this while working a full-time job? That's a real one. Short answer is you do it with your homies like we did, start an investment group. So a lot of startup costs, time. I'm hearing market dynamics, worried about multiple properties and management, the unknown risk. These are real. And these are all things that we all had to face, frankly, still face as landlords and real estate investors. And I'm sure when Allyson and Alex start speaking, they'll share some of their stories and things they had to overcome to build the incredible, venture firms and organizations that they're leading today. These are all common misconceptions, but we can go to the next page. Here's some of the ones that the team kind of talked about when we got together and shared our own experiences. Next, click by. Next page. Here's some of the things that previous page, there might be a delay.
Oh, give me one sec.
You're good. So a lot of the things that you all threw in the chat are things that we shared, right? And these aren't just things we Googled or found in some textbook on why to not get into real estate. These are our actual experiences. So access to capital and having the capital to make that first investment, access to deals, not knowing where to look or where to go, management of multiple properties or just your own time and energy, legal complexities, risk, etc. So what we just want to impress on all of you, and Vyran did a great job of doing this on the tee up around the different ways you can get into real estate, is that there are a bunch of different ways to get into real estate. Not all require tons of capital, not all require tons of legal risk or access to tons of deal flow. So it is an incredibly important asset class to be in. If you look at the richest people in the world, they all are in real estate, and many of them have made their wealth in real estate. So just start somewhere, figure out what you can do, and make sure you are able to have a seat at the table for this asset class. It's just an incredibly important one to be in. With that, I'll align with my brother Vyran on not wanting to speak too much. So I am going to share an exciting update and then pass it over I guess I'll keep the ball, but I'll start facilitating a conversation with our incredible panelists. We are super excited to be letting you know that we're meeting our Cascades family in person for the first time. And when I say family, it is all of you beautiful brown and black and allied people on the call in DC, February 12th. That's a Saturday at 6 o'clock at a spot called La Society. So for those of you that put Maryland or DC in the chat, you have no excuse. For those of you that have been to Law Society, you'll know how awesome of a venue it is. We've secured the back terrace. There'll be heaters and a covered little patio, and we'll have food and drinks, and just a really good time to get together and start fellowshipping and sharing more of our experiences, knowledge, access to deals, et cetera. So if you happen to be in DC, please go to our website ASAP, because we can't accommodate everyone. And the people who register first and show up first will be with us. Again, it's February 12th, 6 o'clock, Law Society in DC. Go to www.cascadesvg.com/engage, and you'll see the second event listed there after tonight's event is the DC event. So please do register, and hope to see some of y'all on the 12th. And with that, we can go to the next page, Vi. All right, beautiful. So we have two panelists today, and I have tons to say about both of them. So I'm going to get to the bios very quick, because when I was reading their bios, I realized how incredible their experiences were. And yeah, I'm just going to not do it service if I try to shortcut it or, give you my own little synopsis. So I'm just going to tell you by reading how incredible these people are. So first, let me try to get a spotlight going here for Allyson and Alex. All right, can someone just put like a yes in the chat if y'all can see me, Allyson, and Alex clearly? Beautiful, beautiful. All right, and then a quick mic check. Allyson, can you clear your throat? Alex, can you do the same?
Hello.
All right, beautiful, beautiful. So I'm going to remind you of how incredible you are by reading your bios, and then we'll get to the Q&A. So Allyson Pritchett is the founder and managing partner of Bodka Creek Capital. It's a commercial real estate investment firm based in Houston, Texas. Shout out to Dirty South. And her firm is over $100 million in assets under management and owns over 1,000 multifamily units in the Southeast region. I feel like we just need to clap and congratulate and celebrate you for a little bit, because that is fantastic. Prior to Bodka Creek, Allyson worked in the development group at Walt Disney Parks. We all know Disney. And she underwrote and redeveloped hotels, retail spaces, and theme parks for the multi-billion-dollar asset portfolio. She also covered the senior living sector as a summer investment analyst with T. Rowe Price. And between those experiences and founding Bodka Creek, she led teams as a senior consultant with Boston Consulting Group, executing strategic projects that launched new products into market, renegotiated cost bases for organizations, and helped secure the 2028 Olympic Games for the city of, yes, Los Angeles in 28. And if working at one top tier global management consulting firm was enough, she also spent time as a consultant at my former employer, McKinsey & Company, as an investment banker, with Merrill Lynch in New York City. She holds her MBA from Harvard University's Business School and a bachelor's in applied math and archaeology, super random but awesome, from Harvard University. She's an alum of Project REAP, which stands for Real Estate Associate Program, and a member of the Urban Land Institute, which I had to Google to figure out what it was. In her free time, which I don't know really exists, she volunteers with the Junior League, mentoring the youth in New York City. As a former Division I track and field athlete, shout out the Penn Relays coming up, and she brings discipline and focus to her properties and investors. Allyson, that was a mouthful. We are thrilled.
I need to shorten my bio.
Incredible, incredible experiences. We're going to talk a lot about the real estate aspects of your experiences. But again, thank you for joining us tonight.
Anytime.
And Alex, my guy from Philly. I saw a couple Phillies in the chat, so you're in good company here. Alex Robles was born to parents from the Dominican Republic and raised in the Kensington neighborhood of Philadelphia. A first-generation college student, he attended Penn State University, majoring in hotel, restaurant, and institutional management. After graduating in 2009, he spent 7 years working in operations at HEI Hotels and Resorts, which is a private hotel real estate investment firm, which also has tons of assets under management and in operations. In his time with HEI, he spearheaded sales and marketing efforts for hotels within brands such as Le Méridien, probably a top 3 hotel chain for me, and Westin, prior to leading business travel strategy for a 17 hotel cluster. Then in 2017, he enrolled as an MBA student at the Wharton School, which is where Jalise also went, with the goal of transitioning from hotel operations to impact-driven real estate development. So we've been talking a lot about the importance of real estate from a wealth building standpoint. Alex brings a really unique angle because he treats it as an impact investing mechanism as well. Graduated in 2019 from Wharton and launched Brotherly Love Investments, a vertically integrated residential, so 1 to 4 units, platform targeting 6 to 9 month exits for investors through Section 8 rentals and middle market flips. Alex has executed over $2 million in transactions with that business. And in 2021, his Voyage Investments firm partnered with an established impact-driven developer, Shift Capital, to build larger scale mixed income and hotel projects. His passion for real estate derives from his desire to contribute to low-income communities by improving existing housing for residents and generating jobs for individuals of different education levels. Alex is married to his college sweetheart, Leanne, and has twin sons, Lorenzo and Christian. Welcome, Alex. Thank you also for joining us. So I don't know, I feel like we need some more, appreciate you, man. We need some more audience engagement. Who is as excited as I am about Alex and Allyson joining us? Please throw a 2 in the chat if that is you. I am 2 hype. And shout out to the Nesby engineers that may have got that reference. Love the 2s, love the 2s. All right, so first question. We didn't give you this as a prompted question, so hopefully this doesn't throw you off your game a little bit. But I would love if you each could just take 2 or so minutes and tell us the stories of your enterprises. So Bodka Creek Capital for you, Allyson, and Voyage Investments for you, Alex. And we'll have you go first, Allyson.
Sure. So Bodka Creek Capital, it really started when I was, I think as a lot of people are in mid-career at some point where they kind of look up and they say, wait a second, I was only supposed to stay in consulting for 2 years, and then I was supposed to go do what I was supposed to do. And now it's been 4.5 years and I'm trying to make partner in something I just don't want to do. And so you sort of pull back and you say, okay, how do I get back to what I'm really passionate about, what I love? And so that was really where I started figuring out how to start Bodka Creek, how to make the firm work. The name kind of comes from a creek that my great-great-great-grandfather built his homestead on after the Civil War. And so in many ways, like the part of it was about making money and doing real estate, but a big part of it was about community and building something that was part of connecting people, improving lives. And so a lot of what we do is value add stuff with our firm. So we do Class C workforce housing. We buy properties that aren't that nice, that make you cringe a little bit when you walk inside some of the units on inspections. But then we always feel really good knowing that we're bringing fresh capital in. We're going to fix places. We're going to get pest control out. We're going to make the homes nicer so that folks who are blue collar, who are living in workforce housing, have better homes to live in. And I think it's kind of a nice thing when you can both invest and make money for investors, but also build communities that are better and nicer, where kids can grow up, where elderly people can retire and feel comfortable and feel, you know, love and strength and all that good stuff that comes from having a nice home. So that's what we do with Bodka Creek. It's been a crazy journey that would take much longer than I have on this call to talk about, going from 0 units to over 1,000. But it's been worth it every step of the way. So
Awesome. Thank you. All right, Alex, same question for Voyage. Tell us a little bit of the origin story.
Yeah, absolutely. So I'll start off actually first with Brotherly Love Investments. So I'm from Philly originally. I left the city for 10 years, came back here for business school. The city changed completely while I was gone. Neighborhoods that I grew up in or spent a lot of time in got completely gentrified. And when I got back, I also started looking at the difference between the average rent for new construction buildings versus what that median income or the average family can afford. There's a huge gap there. So there's a huge shortage of housing that's affordable to most folks in Philly. And I decided to start a company called Brotherly Love Investments, where we would go in and buy distressed properties. So that means abandoned, typically abandoned properties, 1 to 4 units, in areas that have strong transportation fundamentals. So areas that are close to the train stations. Here in Philly, a lot of the gentrification is followed along with the train line. So I went in and bought distressed properties where we could go in with our own construction team, fix them up. Once they're fixed up, we lease them up with Section 8 tenants. For us, the rent subsidized about 60 to 70%. So that removes a lot of the risk. And then once the properties are leased up, then we'll refinance and return capital to our investors. And then ultimately, I'd be building out a portfolio over the long term. So far, I've done 9 deals there. But the only thing with residential is that it is a difficult business to scale. To do, you could do a couple, but from as far as doing construction, it's difficult to really grow that out. So for me, with Voyage Investments, I was looking at apartment buildings where we could go in and acquire them, fix them up, and deliver workforce level rents similar to Allyson. I was focused on the Philly market, very difficult. So I didn't source the deal for over a year and a half. So I recently partnered with a developer, Shift Capital, as mentioned in my bio. We're going to be working on ground up mixed income housing, where I could leverage their balance sheet. I could find deals and better position ourselves to be able to scale from there.
Awesome. Thank you, Alex. Actually got a follow-up question for you. You've had a lot of experience in real estate, and just looking at your track record, it's been incredible to see how you've moved from commercial to your own private things and kind of community sourcing and deployment of capital. So it's incredible to see how many diverse angles of real estate you've actually delved into. So quite a few of us in the chat are somewhere between beginner, or we'll say novice or amateur investors in terms of real estate investing. What would your advice be to the first-time investor? What were some of the things that you struggled with when you got in, and what advice would you give others that might be struggling with the same?
So I think the biggest issue at the beginning is just lack of knowledge, right? Lack of experience, which is obviously straightforward. So I think there's a lot of risk when you're going into real estate. So if you are going into real estate, figure out what your goal is. Are you looking to build long-term reoccurring revenues every month, where you make an investment of today and then eventually it'll go in and start generating cash flows every month? Or are you looking to make an investment, fix up a property, and then sell and get a lump sum? I'm more of a fan of rental properties, because that's how you truly build wealth. Because at that point, you can, if you have a good management in place, you got to lay that caveat down. If you have a good management company in place or good processes, you can decouple your time from your money and be able to scale up. But the big thing is partnering, if you can. If you don't have time, it depends on your situation, but if you don't have much time, then definitely partner with an operator that's done it a lot. You want to have boots on the ground, especially if it's residential, because when you have construction, the construction teams at the residential scale, there's a major variance between who's good and who's bad, and it's hard because it's hard to figure out unless you get a referral which contractors are actually good or not. Whereas when you get the large scale commercial, you can go in and partner up with a general contractor that has a long track record, has a list of references. It isn't like that in residential. So I guess it depends on your unique situation. How many dollars do you have to deploy, and how much time, how much bandwidth do you have?
Love it. Yeah. Really, really helpful tip. Just in case y'all didn't catch it, I heard Alex say that if you don't have a lot of time, partner with an operator who has boots on the ground. From our experience, it's critical, if you're getting into something new, to have someone who is not just experienced, but able to manage what the day-to-day operations, if that's involved with the with the investment will involve. So yeah, great tip. Appreciate you sharing that. All right, Ms. Allyson, question for you. So you have over 1,000 multi-unit properties, and I'm not going to do the math on that, but I'm assuming multi-units have multiple units in them. So you have multiple thousand properties under management at Bodka Creek Capital. Talk to us about your favorite deal and why it was.
Ooh, that's hard. I think all the deals it's kind of like almost like having kids. I think you can't have a favorite. They all are very unique. So one of my smallest deals was one of the first. And so that's special in like a lot of ways, because it was the first time negotiating with the seller, doing inspections, doing all that stuff. I would say probably the most recent deal is my favorite. I think it was one of those ones where I went in knowing, okay, it's not going to end out the way you think it is whenever you first get started going into contract. And it absolutely didn't, but it just outshone in so many ways. And so very typical of deals that we looked at, it was low occupancy when we first looked at it, 81% occupancy. A bunch of lenders had said, oh, we don't want to give you a loan because it's a high crime area. I looked at the crime maps, all the crime was on the property and not in the surrounding neighborhoods. I was like, hey, if we fix this property, it fixes the crime. So we had to find the right lending partner. And so just a bunch of different things that made it a challenge at the beginning. But by the time we closed, the property was sitting at 91% pre-leased occupancy. We're now 6 weeks in, it's at 94% occupancy. And just like thriving, and the crime has gone down. We moved in a new security team that does some really strict enforcement of the rules. So it's one of the things that, you know, you really start learning as you get into ownership with property, and particularly with apartment complexes, is as an owner, you very much almost have like more power than the police to determine what does and doesn't happen in a community, because you can say, oh, hey, you want to deal drugs out of my apartment? Well, we're going to non-renew your lease and you have to leave. And then that's kind of it. You know, the drug dealers have to go find somewhere else to set up camp. So there's a bunch of things that you get to do to ensure a community is safe and ensure a community is thriving and positive. And we're only a few weeks in. We've gotten to do a lot of that with this project. And now we're able really to just to go, okay, you know, we thought we were going to be at 85 occupancy in year one. We're now almost 10 percentage points above that. So we can just focus on a lot of capital projects. And I think some of our asset managers are on the call right now. So they're looking at, you know, turning parking lots into playgrounds and just a bunch of other cool stuff. So it's exciting when you can get past the stabilization phase really quickly with a property and get to actually putting capital to work to make the properties more fun and more exciting for everybody. So that's kind of my favorite one right now.
Okay, that is super cool. And also, like, just a little nugget I heard in there for folks that haven't, you know, started in real estate investing. You can invest passively, and that's a lot of what Allyson provides to, you know, her community and her investors. So she's doing the heavy work. She has folks on the team, on her team, joining us tonight that are probably going to go right back after this call and keep crunching numbers. But when you find people that know their markets, that see value, that can be kind of, you know, action oriented once the numbers are painting a picture that makes sense, investment sense, find those people and stick with them. So getting into real estate is not always about you owning everything and doing all the primary research yourself. You can find people that are experienced and as a way to get in as well. And that's why I'm super excited to hear Allyson. If you guys stay until the end of the call, she's going to share a deal with you. Partially just to educate you on how things could look and kind of the process that she runs in her firm, but also just to provide the opportunity for anyone who wants to reach into their pocketbooks and invest in someone who knows what she's doing and is building wealth in our community. You have that today. So super awesome to hear, Allyson. Thank you. We got some great questions in the chat. So we'll start with you on this first one, Alex, and then we'll just maybe bounce back and forth. But if anyone feels passionate about any question asked, please do jump in. All right, so Ade asked, if you want to get into real estate, is it better to start off as an agent, real estate agent, and then go into investing? That's for you, Alex.
I don't think it's really necessary unless you want to be an agent as a full-time job, but it's a plus in knowing a market, but it's not I don't think it's a must at all, because it's a different skill set, right? When you're going in as an investor, you have to run numbers. You've got to build out a team. You've got to meet a lender. You got to have your contractors. If you're changing the layout, you need an architect. So it's just a completely different skill set. So I don't think it's a must.
Great, and I see Allyson nodding, so it sounds like you'd agree. Alex, I might keep this with you. There's a question that was a follow-up to your operator suggestion. So Margaret asked, how do you identify a good partner or operator as your boots on the ground partner? What are qualities to look out for?
Just a track record, right? And that's hard. There's different organizations, like each market has its own real estate clubs that you can go on and network, especially at the residential level. I mean, all of real estate is heavily network-based. So just get yourself a part of the, you know, here in Philly, we have Better Than Success. There's a different real estate investment associations that you can go and just drive around. A lot of times developers or rehabbers will have their development sign outside of their project. And that's the only way. It's just networking, really. There's no listing which shows, okay, this person's good. There aren't Google reviews, you know, for rehabbers, all like that, unless it's just their end product. So it's easier said than done, but I just recommend networking, going to clubs.
Yeah, and I'd echo what Alex said about kind of just driving around. We have a mid-rise development that we're doing here in Houston, and it's our first time moving away from, everyone says wood is good, but we're moving away from wood and doing steel and concrete, and finding a contractor it's not really something that you can just kind of Google steel and concrete contractor to figure out who can do that and do it well. So you kind of just have to drive the city, look at developments that are there, see which names are on the signs. And then sometimes even giving them a call doesn't work. So you have to just go on site and be like, hey, who's the foreman here? Who can I talk to? And then in that way, you start kind of building out, who based on, just really almost driving around and finding the right folks.
Wow. Yeah, and that's the heavy lifting that not all of us can do with our day jobs. So if you're trying to get into real estate investing in that way, find some help. So Maurice, who once again is on camera, thank you, my good sir, with your 4K camera over there, looking good. There's a big difference between, this is for you, Allyson, single family rentals and commercial real estate. For those wanting to get into real estate investments, what are the key things to understand about these two different types of assets, and how do exit strategies differ? Single family rentals and commercial real estate.
Yeah, so I actually, similar to Alex, I started out in single family residential. As a kid, had seen my aunt, who was a real estate broker, build up to over 40 single family homes, and she was renting them out. And I was like, oh yes, that's the secret to wealth, is buy a bunch of single family homes. So I bought my first foreclosure, did the fix and flip thing, but really it's more of a fix and hold. So I held it for about 5 years. And realized, kind of similar to Alex, that it is very hard to scale. You have to put a lot of work into a fix and flip. So I was spending nights and weekends laying tile and doing all sorts of other stuff. And at some point you look up and you realize, oh, wow, like the one mortgage I got for this could have been one mortgage for a 20 unit. And the income that a 20 unit apartment complex has is enough to pay a property manager and some construction people to do all this stuff instead of having to do it myself. So you just start realizing the benefits of scale. So a little bit of that was just learning by doing, but you can sort of learn just by kind of having conversations with folks that are investing in the single family side to get an understanding of what they're doing day to day and what takes up most of their time, versus folks who are investing on the commercial side and what they're doing. The commercial side, you do have the benefit of having pooled resources. So there's a lot more budget you have to work with your properties versus the single family side. And you also have less risk, because if one resident moves out in a single family home, then you have no income coming in anymore. Whereas if one person moves out in a 460 unit apartment complex, you have a lot of other folks that can still be contributing to the income of the property. So it de-risks it in a lot of ways.
That makes a lot of sense. Love it. So back to you, Alex. I have two somewhat related questions, and given your impact investing orientation, I'll pass this one to you, but again, Allyson, dive in if you have perspectives. So Delegate Marlon Ampry, this is a delegate from Baltimore that's with us. So thank you for your service, sir. He asked, if you've invested in opportunity zones, what are the challenges in investing in these zones that new investors should be aware of? And then Papa also asked, can you speak on your experiences with accepting Section 8 vouchers with respect to rental properties, wins and challenges? So different questions, but I think the two questions generally are, what are some of the challenges with investing in either opportunity zones or Section 8 housing as it pertains to vouchers?
Got it. Let me take down the Section 8 one first, and then we can do opportunity zone second. I'm sure Allyson will probably want to add in a little bit there, since typically it's larger transactions, but I can dig into both. So for Section 8, every city has its own housing authority, and it's going to have a slightly different process. Here in Philadelphia, in order to be a Section 8 landlord, you need to become, there's like a 4-hour training that you need to attend. There's 2 inspections that you need to pass before. Here it's a free market where there's a website literally called gosection8.com that Section 8 voucher holders can go in and search for a place that they want to move into. So as a landlord, you go in, you list that, you pass your inspections with the city, and then it does take about a month and a half to 2 months. So it takes probably 4 to 5 weeks longer than it would be just a traditional tenant. But the fact is that the rents that you'd be receiving as a landlord, you're getting market rents depending on the area. So like the areas that I target, I'm getting market rents, except about 50 to 80, 70% of it is subsidized already, so it's guaranteed. So that reduces the rental risk by a lot. And then going to the opportunity zones. For opportunity zone investors, typically it's larger transactions because the only benefits to those investors that decide to invest in opportunity zone funds is just for investors that have a capital gain that they're looking to defer for 10 years. I don't want to dig too much into it because we can go on here for a long time. But it's a unique opportunity for folks that can for developers that target land within these specific designated Q opportunity zones, and they raise money from these funds or with investors that just incurred a massive capital gain that they can go in and defer. There's amazing perks for those investors, but it is kind of like it is a niche. Alex, I don't know if you want to add anything further there.
Yeah, no, I mean, I would say the big thing with opportunity zones is that it really is just like a tax play, but very similar to a lot of real estate. I know earlier folks were talking about the tax benefits with real estate. I think the biggest one that even as I got into it that I didn't quite realize was the tax depreciation, and that you can do these things called what's called a cost segregation analysis when you have a larger asset, where after the first year you can have a financial engineer come in and do a bunch of analysis, and they can actually get to a place with the bonus depreciation pulled forward where you can write off pretty much all of the equity that you just put into the deal as a huge giant tax depreciation shield that comes through in your first year. And then the opportunity zone makes it so that on top of that tax depreciation, you also just don't have to pay any taxes on any income you make off of the investment for 10 years. And so not only do you get the tax depreciation shield, but you also don't get taxed on a bunch of income that you're making off the investment. So it's really nice way to keep a lot of the returns on like longer term investments. So.
I love that. I love that. All right. So this has been a super engaging dialogue. I do want to try to keep us to time and give you enough time, Allyson, to tee up your opportunity. Alex, thank you so much for joining us. Feel free to hang out. If you want to drop your contact information, your LinkedIn, or how people can follow you and Voyage in the chat, feel free. Can you guys just give us like a virtual round of applause for Alex? Thank you so much for joining us tonight.
Thank you all.
And for questions that were asked that we didn't get to, I'm just going to make a plug to join us in DC. If you're not in DC, you can get on a flight. We will accept anyone, even those paying for first class flights, to meet us. Go to cascadesvg.com/engage and register. We'll be having a lot more opportunities to share knowledge, information, and answer tons of your important questions in the future. Beautiful. Thank you so much, Allyson. And once again, Alex, for joining us. If you're looking at the screen, 3 next steps for everyone here in this order. Join us in DC on February 12th for our first mixer with Cascades members. The GPs will be in town in DC, and we'll be at Law Society at 6 o'clock on February 2nd. So cascadesvg.com/engage to register for that event. Please invite friends, family members, colleagues, anyone who you think could benefit from a session like this, or just joining a cause like Cascades. And going to cascadesvg.com/join is how you subscribe and enroll to the community. And then third, grab some swag. A few of us have our Wealth Builder hoodies and sweatshirts on. We see you, Jaleese. We see you. We got onesies, we got sweatshirts, we got hoodies, and we are making no money off of anything we're doing. So this is simply a token of your appreciation to us. But honestly, we're trying to build community and build some brand at the same time. So please do buy some swag, gift it to others. And if you just appreciated this session, maybe show us that small gift by spreading the love and spreading the brand around Wealth Builders. With that, I'm gonna let Vyran throw on some smooth tunes, and we'll let everyone go. Feel free to hang on for a couple more minutes if you want to just send more praises Allyson's way or socialize the chat in just a few minutes. Thanks everyone for joining.
Don't know if you got a girl, don't mean to disrespect, but arms of you rule my world. I even dream of you, I swear. Visions of you and I. feel me. I love you good. Just wanna be your girl. All alone at night, I harbor feelings for you.